going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, AMD, Nvidia, Meta, and Amazon. We're going to go over these stocks, their key levels and price targets, but before we do that, we're going to jump into some key economic reports that happened last week and some things that are happening this week that can potentially send markets further higher or force them to pull back and retest lower lows. So let's go ahead and get started with the most important thing that came out last year, and that was the release of the Consumer Price Index, otherwise known as the CPI report. The CPI report updates markets on inflation, and as you know, over the last 24 months, inflation has been the biggest battle for markets. The Federal Reserve was forced to raise interest rates in order to battle inflation, and so far the fight against inflation has been winning. However, it has lingered around 3% over the last 4 or 5 months, which has left markets a little uncertain, and it also has forced the Federal Reserve to scale back their interest rate cuts to just one cut this year. So last week we also saw the FOMC meeting. Jerome Powell, which is the Fed president, came out and said that we're only expecting one rate cut this year versus what we were expecting in the beginning of the year, which was multiple rate cuts. And so this came out as a little bit of a shocker for markets. We can see that between Tuesday and Wednesday on that CPI report, when that report was released overnight, we jumped to a new all-time high. But as the Federal Reserve held their meeting and as we closed out the week, you can see we started making lower highs on the SPY or the S&P 500. And so obviously the market was anticipating more interest rate cuts, and the fact that we didn't get that, that's kind of an uncertain part for the market, because remember, the higher interest rates are, the more expensive it is for companies to borrow, therefore their bottom line and overall profitability is hurt, and higher interest rates also make it more expensive for consumers to spend, which impacts our overall economy. So markets are really waiting for those interest rates to be cut in order for them to take full confidence and continue charging higher. But nonetheless, the market is still generally bullish despite the fact that buying power fizzled out by end of week. We are still trading near the all-time high. Many stocks are still looking very bullish, and we're about to jump into those stocks in just a little bit. But before we jump into those charts, let's continue talking about some things that are happening this week, which the primary events that are happening this week, we are getting a little bit of a slowdown this week because last week was extremely impacted with a ton of data. This week it slows down. The Federal Reserve is expected to give a few comments between Monday and Tuesday, and then we have a holiday on Wednesday. So don't forget, we're honoring Juneteenth Day holiday, so we'll be closed on Wednesday, and then Thursday we come back and we talk about more jobless claims, housing data, and of course, last but not least, we do have some retail sales data, which is on Tuesday. So retail sales data has fallen over the last few months. You can see that last month showed 0% growth in the retail sales data for the United States. This report is key to pay attention to, especially if you are invested in retail stocks. But even outside of retail stocks, so stocks that are outside of your Macy's and your Nordstroms and things that are more on the retail front for consumers, if you are not invested in those, this number is still important to pay attention to, because remember that consumers are at the forefront of our economy. And so if consumers aren't spending and we get to see their spending habits, we can get an insight of where the money is flowing and what they're spending money on and what they're not spending money on. So be on the lookout for this report on Tuesday. So that's as far as the economic front goes. Let's go ahead and jump into our charts. And we're going to start off with SPY. And if you're familiar with our videos, you know we always like to start off with the big picture, so the macro picture. Let's see how SPY's week ended last week. So we can see that the weekly candle was a strong one above all-time high. It closed above all-time high, which is above the previous week's candle. So overall, we're looking pretty good. We are noticing a little bit of a weaker relative strength on this breakout though. So the RSI is a little bit weaker than the previous high, which is something that we have to note. It may be signaling that we could see a pullback this week. If we zoom in just a little bit closer on the daily chart, we can see that volume did die out by Friday. It started declining from that initial gap up day. And then when we zoom in even a little bit closer, we can see that we're making lower highs. And so coming into this week, our main resistance and focus is going to be that 544.12 mark. So that's the all-time high mark. If we break above that and hold, it's key that we hold the breakout, then our next price target above that is going to be 552. But remember, you guys, that in order for us to keep a breakout, we need volume. And so an early week breakout. So if we break out Monday or Tuesday, we may not hold that breakout because we haven't built up enough volume to build up that momentum to carry us to a breakout. And so be careful if we see an early week breakout, it may fail back down to retest 537. Now, if we break below 537, we are still bullish on the general trend, and we expect us to fall to retest 531 and retest this trend line. You can see that SPY has been riding this trend line, and it has gotten a little too far away from it, so we may see a retest in the coming weeks. Now, if we break 531.30, that's when buyers can be in a little bit of trouble because they would have broken below the trend line and they could head towards 518. We don't expect that to happen this week. That is a little too aggressive. But if it does happen, then just be on the lookout for that pivot point at 518. Below that point, we don't have much support and it can get ugly pretty quickly. Now, the next stock on our watch list is going to be Tesla. Tesla tried very hard to break out last week, but you can see that by Friday, buyers snapped it back into that same sideways range. Tesla has been in this range for months now, with both sides trying to get it above and below the range. That way they can get a rally going to either direction. But you can see that it has been struggling and continues to struggle. The latest of its struggles came from Elon Musk's pay package. A lot of uncertainty around that, so obviously that's affecting the stock. One thing we have to note is that last week's daily chart moved back above the 100-day moving average. This is a line that Tesla has not seen a level above since January. The 100-day moving average is a significant moving average because when a stock is trading above it, it is trending in a bullish direction usually, and if it is below it, then it is trading in a bearish direction. So great attempt by buyers to bring it back above, but by Friday you can see that it closed right back at it. Not a lot of movement, but here's the shorter term charts if you are looking for levels. So you can see we had a resistance here on our chart at 187.55. Tesla tried that breakout above it and failed, so we have to raise our resistance now to those highs. And so our new resistance and focus is going to be 191.60, which is going to be what we're going to update this to. And then our bullish range is also going to move up to 191.60 because this is the new breakout point. Our price targets are going to remain the same if Tesla does successfully break out. To the downside, our pivot point is going to be 166, and these are the two downside price targets. The next stock on our watch list is going to be Apple, which leaped phenomenally last week. We haven't seen Apple move this way in years now. I mean, this is the biggest jump they've had in a very long time. You can see that the stock saw an intense amount of volume. It closed near its all-time highs, and so it's leaving many to wonder what it's going to do this week. If you are looking at Apple on the shorter term charts, our main resistance this week is going to be 220.20, which is its all-time highs. This is the point where it got rejected. So that's going to be the breakout point. Above that level, it is a blue sky breakout. Apple doesn't have any resistance above that level, so it can continue rallying on and on. But just keep in mind, you want to keep your eye on the volume. In order for a rally to be sustained, it needs volume. And so if Apple doesn't have volume, it may sell back down. If it sells back down, these are some supports that you can work with. The next stock on our watch list is going to be AMD, which has been a little boring in recent weeks. You can see that like Tesla, it has just moved sideways. AMD is actually one of the semiconductors that we have turned bearish on just because the company is extremely overvalued. We don't see the same kind of growth that Nvidia is posting and Taiwan Semiconductor is posting. AMD has actually flatlined, and their price to earnings ratio should be considered as one of the more expensive stocks. So we are leaning more bearish than bullish on AMD, but here are some levels to work with. We can see that AMD fought all week around the 158 support and ended just above it last week. So that's still our main support coming into this week, but we do have a pivot point below that at 149. Below 149, AMD can sell off strongly towards the 133 to 135 mark. And if you are bullish on this stock, then you need a breakout above 174.55 to see these two price targets. Keep in mind that we have noticed a trend on AMD. It usually starts off very strong and then just dies out by end of week or end of day. So that is a trend that we've seen, which is considered more bearish than bullish. The next stock on our watch list is none other than Nvidia. Of course, Nvidia reached another new all-time high last week. Here are some levels that we're working with. The resistance in focus is going to be 132.84, which is its all-time highs. Above that level, we expect it to continue going. Our premium members do have our next two price targets. We've been in this stock before it split around the 400 mark, so it has been very good to us, and we do have two more price targets in place. Supports in place are going to be 124.35 and 117. We wouldn't really bet against Nvidia. This is one of the strongest stocks on the market, so even if it pulls back, we'd see that as an opportunity for entry. The next stock on our watch list is going to be Meta. Meta mostly flat last week. Here are some levels on the daily chart. We can see that it's trading above all of its healthy moving averages, and it is starting to kind of inch towards its all-time highs, but hasn't quite got the volume yet to push it. So let's see what's happening with Meta on the shorter term charts. The main resistance coming into this week is actually not going to be 531.60. We're going to adjust that to the highest point they reached last week, which was 516.88. So 516.88 is going to be one of our resistances in focus. If it can manage to break above that 516.88 mark, then we do expect Meta to move towards its 531.60 mark. Maybe not this week, but maybe in the coming week. So if you are looking at Meta for a bullish trade, look at it with a longer time frame because it is one of the slower movers. Last but not least, Amazon pulled back to end last week after attempting a rally towards its all-time highs. You can see that by Thursday and Friday, that rally died out and there was strong profit taking, ending the week in a bearish overnight trend. So here are some levels that we're working with for Amazon. If you are looking at it on the shorter term time frame, which is the hourly, you have a support at 182. Not much support below that point, you guys. So make sure that you keep this in mind. Anytime you see a vertical rally, that vertical rally can easily be filled back down in the other direction because there wasn't much areas of strong support or consolidation to build a base. And so if Amazon breaks below 182, it could be in trouble and it could fall towards 174. If you are bullish on this stock, above 182 is considered bullish. However, it needs to break above 188.40 in order to see continuation towards that 191.70 all-time high. Thank you guys so much for checking in. Don't forget to subscribe and like.